Hello everybody, it's Jason with Investing Logically. Hope you guys are having a wonderful day. In this video we'll be talking about Peloton and their earnings are coming up and whether you guys should buy, hold or sell. Also feel free to like this video for the YouTube algorithm so more people can see my videos and learn more about investing. So the stock we're talking about today is called Peloton Interactive, ticker symbol PTON. It is currently trading around $157.53, 7.04%, which is a huge run up. Let's talk about Peloton. What is Peloton? So Peloton is basically, it's an American and international company that provides fitness products. So these are not just normal fitness products. On these products, like such as the Peloton treadmill, they have a big screen that streams live demand classes, which will motivate you to work out. Like, it's starting around $1,895, and there is a monthly subscription for their membership at $49 per month, which is pretty good. So again, why I think this company is so good. Look at their accessories. They have weights here. They have a heart rate. Their quarter for 2020 earnings that just came out like 10 minutes ago, so we're going to go through it. So which is 1.064.8 million, which is a 128% year-over-year growth. That is amazing. And their connected fitness revenue is 870.1 million, which is 124% year-over-year growth. Their subscription is 194.7 million, which is 152 year-over-year growth. Their connected fitness activity is 98.1 million. Well, 98.1 million workout, which is 303 year-over-year growth. This is amazing. We've seen COVID-19 had a massive impact on this company. We've seen people stuck at home, they couldn't go gym, so they went to Peloton, they bought their products, and look what happened. They have grown massively. So that is a good thing. So we're just gonna look. So this, I'm not gonna read this, but this is like their gross profit has increased 39.9%. Look at this massive growth. I just can't believe it. I do think this is a great company to invest in 2021. Look at their subscription revenue. Look at this. Just their subscriptions. No products, just their subscription. The monthly subscription. So look at this. In 2019, December 31, they had 144.3 million in revenue for their subscriptions. And in 2020, they had 351.2 million, which that's a massive increase in subscription growth. So around 319.5 million total assets. And look at their liabilities. They have 1.982.1 million in total liabilities. So they have enough assets to cover the liabilities, so they can so they're not going bankruptcy soon. They have 1,248.4 million in there, which is a lot of cash actually. That is a lot of cash. So much, bro. They have so much cash right now. They can literally pay off their current liabilities with that. Look at their revenue for their fitness products. So not subscriptions, just products. So look at this. So in 2019, December 31, they had 550 million in revenue for their products. But in 2020 of last year, December 31, they had 1,471.5 million, which that's a massive increase from 2019. We've seen with everything. They're profitable right now. They have an average price target of $158.45, so that is pretty good. They have a high of 190, a low of 110, the bears of course, and an average of $157.53. So they have 20 buys, 2 holds, 1 sell. So overall, the price targets are looking pretty good. Look at the ARKW ETF and give you guys a bit more confidence in what this ETF is doing. So this is their 38th holding. They have around 123,000 shares of this company. Do not base your decision on this ETF as if the company dips, you won't buy the dip. Fundamentals, you believe in what they do, in this case, which is fitness products, then invest in the company. We're just going to talk about how I would invest $1,000. So, quickly, they're up 7.04% on a day, and currently on the year, they're currently up 381.74%. So that is pretty good. So we can see that in the after hours, they're down 8.27%. I do think that's the natural thing happening when their earnings come out. put your first 250 tomorrow when the market opens. It's Friday tomorrow, so it should be down. If you believe in the company, you buy whatever price it is tomorrow, no matter if it's down or up. But I do expect it to be down, because we can see in the after hours it's down 8%. So yeah, it was down 3% more on Monday. Then put your next 250 on that. Then the next day, if it drops even further, so let's say it drops 3% more, put your next 250 on that. The last day it was even further, so let's say 4% more, and then you put your last 250 on that. The reason we do this is because we average down. We want to expect the dip, average your cost, so you don't miss out on these buying opportunities. And then after you average down, you ride it up to its highs. Targets for this: my low price targets, if people do not continue to buy the subscriptions and the products, it could go down to easily $100 or less. My high price target for this would be around $400 this year. $400, which is above 100%. So if you guys enjoy this video and want to see more videos like this, please feel free to subscribe to me. Feel free to like this video for the YouTube algorithm so more people can learn about investing. Hope you guys have a wonderful day, and see you guys in the next one. Happy investing.